Thanks for joining us. I'm Marlon Bowling with you. We're watching your ag commodity trade here today, and we're going to be joined now by Brian Hoops. Now, Brian is the president of Midwest Market Solutions, and he's based out of Springfield, Missouri, and he joins us right now. He's outstanding in his field, of course. Brian, thank you for being a part of the show. The National Crop Condition Summary that came out from USDA yesterday really raised a few eyebrows when those numbers came out. And let's review, for those that may have missed it earlier today, on the corn condition, it went all the way down to 64% good to excellent. That was a 5 percentage point drop. And soybeans went down 3 percentage points down to 69%. Cotton, believe it or not, actually went up 1 point nationwide. Grain sorghum went down 3 points to 54% good to excellent. And I want to zero in on that a little bit. On the grain sorghum condition by itself, we singled out the plain states where they have a lot of grain sorghum production here. And Texas is unchanged at 45% good to excellent. They've had quite a few issues here for weeks. But look at Oklahoma. That 26% good to excellent rating that shows up on the screen is down a whopping 15 percentage points just from last week. 46% is rated poor to very poor in Oklahoma. Now, the Kansas condition went down 3 points to 65% good to excellent. Nebraska went down 7 points last week, down to 64% good to excellent. And Colorado down 10 points, only 13% rated good to excellent. Look at that, 42% rated poor to very poor. That's in Colorado. And Brian, we have been hearing about that downward slide in the milo conditions or grain sorghum conditions in the southern high plains region there. And I'm hearing areas where they have a 70-cent premium for grain sorghum over corn out in the local grain elevators in some areas there. Have you heard that too?
Yeah, exactly what we've been hearing as well. They'll at some point will start to be substituting maybe some corn or milo, other grains, and substitute for the grain sorghum, because that is a huge premium that they're paying over the this corn price. And you mentioned the corn condition index, and it's easy to forget here while your crop is burning up out in the fields without any rain, that you forget about marketing. You forget about how high this market can go. But rallies that we see this time of year, you have to use these as opportunities to increase your hedges, stick with your marketing plan, add to sales, maybe buy some put options, that sort of thing. Don't get so bullish that you think we're going a lot higher. There's a lot of clients in Iowa that have told me that they are just weeks away from harvesting corn. Rain at this stage of the game won't help them out. The crop is already dented, so their yields aren't really going to be hurt anymore. The crop is going to be what it is. Just heat and dryness is going to speed along the maturity. So, the yields out there are no doubt going to be down from the last USDA report. The 178.5 bushel per acre is out the window. But even if you drop yields to, say, 175, you're still looking at a 2.3, 2.4 billion bushel corn carryout. And that is going to be burdensome and not allow us for a lot of opportunities to see some upward mobility.
Right now in the corn, of course, we had over 500,000 tons of corn sold overnight. September corn now 7 3/4 cents higher. We're at 339.5 per bushel. New crop December up 8.5 cents. On the soybean trade with quotes provided by Bar Chart, September 9 1/4 cents higher at 9.09 per bushel. November now 9 3/4 higher at 9.15.5. In the wheat market in Chicago, here you have the September contract 9.5 cents higher. We're now trading at 5.30 1/4 per bushel. Kansas City wheat has September now 11.5 higher at 4.46 3/4. In the Minneapolis spring wheat trade, here you have September 9 1/4 cents higher at 5.14 3/4 per bushel, just 2 ticks off our high of the day. Brian will come back in just a moment, and we'll take a look at our livestock trade as well right after this. As for gas markets, a little bit weaker here so far this morning, and we did see a turnaround in that energy market on the crude oil as well. We're talking with Brian Hoops right now. Let's take a look at our livestock market activity, and Brian will go first to our live cattle. Well, we're lower, but actually kind of mixed. Now on the deferreds, we're turning unchanged. October live cattle down 15 cents, and now down 12 cents. We're at 107.80. And we have December down just a nickel at 110.77 per hundredweight. On the feeder cattle market today, we now have the September contract 45 cents lower at 142.40. and that's about $1 off of our earlier high. So we've been bouncing around on both sides of unchanged here today. Meanwhile, in the lean hog market, you have October up $1.12 at 55.72, and now December is up 62 cents per hundredweight at 56.22. So the cattle market can't seem to figure out which way it wants to go here today. Brian, did that cold storage report that came out yesterday afternoon have much to do with the markets today?
But it probably has on the hog market more than anything, Marlon. The cattle market reacting to some cash trade in the Southern Plains yesterday. That was at 105, down $1 from last week's 106 trade. And there's also been some trade at 105 this morning in Kansas. Bids are being renewed, some very light trade. And that's a little disappointment to the market as we've seen box beef move higher. We have a lot of heat moving through the plains this week and into next week. And I have a feeling these feedlots want to move some cattle if they can, keep these cattle moving before something adverse would happen with them. And so I think we are seeing weakness in the cash market kind of lead into some weakness into the futures here. But box beef continues to move higher. That'll be a supportive feature. And the hog market seeing a lot of short covering as you see the numbers compared to a year ago, a big drawdown in pork stocks.
All right. Well, Brian, thank you for the time and for helping us analyze what's going on in our livestock trade today. Brian Hoops of Midwest Market Solutions. He's in Springfield, Missouri. Janet, back to you.